Alright, so I'm gonna just get right into it. I don't think anybody else is gonna join. But today's lecture is going to be on rejection blocks. And this is gonna be wrapping up the PD array playlist as well. So we went over basically all the PD arrays. I'm gonna just grind out the rest of the videos like later today. And then tomorrow we're gonna start on the time playlist, which is legit like the most important thing. Like that, like nobody can miss out on because that shit is super important. But yeah, so we got rejection blocks today, and we're just going to be going over what it is, how to use it, and how to kind of determine whether it's high probability or not, because rejection blocks always don't work, and they're a very scary way to trade. So it's pretty important that like you know what you're doing when you're trading them, because you're essentially just like sniping. You're like sniping the market. You're barely getting in any drawdown. It definitely makes the most money out of any other way of trading. So let's just get right into it. So what a rejection block is a wick, so a candlestick's wick that rejects off of a key level. So what that means is, let's say there's a candle's wick that tapped into some type of fair value gap or drawn liquidity. So that wick forms our rejection block. So that's why they call it a rejection block, because it must reject off of some type of PD rate or drawn liquidity. So the idea of a rejection block is, let's say here we take out some type of key level right here. So I'm gonna just draw this out. Let's say we sweep some liquidity and also tag into some type of fair value gap. So the idea of that is whatever wick we form, if we form a pretty big wick showing that we rejected pretty hard off of whatever we tagged into, the idea is that we're not going to go past that wick again, and we're just going to trade inside of it. So I don't know if you guys have maybe noticed, if you guys are ever in like a trade and you have your stop loss at like a swing low with a pretty long wick. Let's say a liquidity sweep just happened. So like here's a pretty good example. Let's say you entered off of like a fair value gap within here, but price literally edges your stop loss, but then continues and hits your take profit. That's the idea of a rejection block. So our stop still remains protected because we don't expect price to go above that wick again. So what this means is that it provides insane risk to reward trades. So literally off of my entries off rejection blocks, I think it's averaged like above 5 RR. So that means if I risked $100 as my stop loss, the take profit would have been 500. So it just provides insane RR, which is way more money. So when it forms, it's pretty good to like take a trade off of. And it typically also gives very minimal drawdown. So in the trade, it'll legit just reject right off your entry and run to your take profit pretty fast. And I'm showing an example of this happening today because we had a really good one. So another thing is that with all this being said, rejection block entries are going to be scary. You're gonna typically have like 20-point stop losses. So if we just see how tight that is, that's like right here. That's like very little. And sometimes it'll be legit 10 to 5-point stop losses. So you're gonna have to get ready if you're going to be trading rejection blocks to just get used to that feeling of it literally moving from drawdown. If you have your stop loss at like 200, you got to get ready for it to be like 170 in drawdown and then just immediately reject and go to your take profit. That ends up happening a lot since the stop losses are just so tight, but it's scary, but it's honestly one of the best entries. Before we go in, just want to say a few more things. Is that we can measure the probability of a rejection block respecting based off of price. So what price did, what key level it hit, and also time. And I'm going to go more on that this upcoming week. We're going to have like a whole time series. It's the most important thing. And there's a very good concept. It happened today, so I'll give a sneak peek of that. And one more note is that this consequent encroachment of a rejection block is ideally where we want to enter off of. So if you guys don't remember, that is literally just the 50%. So the 50% of the wick is where we want to enter off of. And just one more tip before I go. Actually, no, I'll just do that when we get to real examples. But before we go on to the charts, I just want to show what this would look like on a chart. So let's say we swept liquidity up here and we form our wick right here. So right above this line is our candle's wick. So if we mark that out, as you see, the 50% is right here. So this is what an entry would look like. We would enter off the 50% of the wick, have our stop right above the wick, and then target wherever we want. So it could be like this low right here, any of these lows. So let's get into some actual examples. I also forgot to mention one thing. So for rejection blocks, I'd say stick to these 4 time frames: the 4 hour, the 1 hour, the 15-minute, and the 5-minute. Ideally, you don't want to go lower than that, because 1 minute is, you could go down to the 1 minute, but I just say these ones are a lot better. So yeah, here's an example from today. Actually, I just saw this. So here we are. This is today, market open. So what do we have? We have this 9:30 candle on the 5-minute. And if you measure this wick, you can see we have a pretty long wick. It's 59 points. So that is a little bit of a long wick, but if we check the criteria, we swept liquidity. And not only that, I'm pretty sure we tagged into we tagged into this 15-minute fair value gap. So that forms us our rejection block. And that's because we rejected off of this 15-minute gap and we took out this liquidity. So now we want to look for an entry off of this rejection wick. Now, keep in mind that you do have to have some context as well. So you can't just blindly enter off a rejection block. You also have to have some sort of bias for the day. So this would have been valid because we accumulated a lot pre-market. So if you guys watched the AMD video, you know, accumulation, this was our manipulation, took out these lows. So we can expect a bullish distribution. So that being said, we would mark out our wick. So right here, as you see, the 50% is here. But I just want to give another little tip. And this will make you get even crazier entries. So I haven't gone over the concept yet, but if you guys use the OTE fib, basically I'll just give a quick explanation of it real quick because I haven't gone over it. But it's basically just levels of discount. So the 50%, 62% discount, 70% discount, 79% discount. Since we didn't go over it, I'll just say mark it out in quadrants. So for a rejection block, a really effective way to get even more precise entries is marking it out in quarters. So we have 25%, 50%, 75%, and then full 100%. So the reason we do this is because, again, you know, the 50% of a wick is the most likely to get filled and rejected off of. So that is ideally where you want your entry. But let's say it's a bit of a smaller rejection block, or maybe you just want a more tight stop loss and better entry. Then you can enter off somewhere like the 75%. Or if you're scared of missing out on the entry, you can do the 25% or even the start of the rejection block. So right here for this example, we'll just say the 50% because that's typically where you should be entering from. So if you want to enter off of this, we already checked the criteria. We took out a draw on liquidity, tagged into a 15-minute fair value gap, and we formed a very long wick, showing that we rejected off of those levels. This forms our rejection block. So we would want to enter off of here with our stop at the bottom of the wick and our target wherever you guys want. So we'd say here, for example, as you guys can see, that literally played out perfectly. You could have even gone away with entering off of the 75% of this wick, and that would have been a 14-point stop and then 147-point take profit. So literally 10 RR on this trade. If you risked $100, you would have made 1,000, which is crazy. That just shows how powerful this is. So let me find another example. This one right here, this 4-hour example. So this was the first time we mitigated this 4-hour gap, and we also did take out these lows. So this forms our rejection wick. So you guys see right here, it's a decent sized wick. I actually like this entry a lot. And then over here we get our entry. And remember, let's use our quadrants so we can see exactly where it filled. Right at the 15% perfectly, 50% perfectly. So what you could have done is you could have had your entry there, 30-point stop loss at the bottom of that wick, and then target however much RR you want. So as you guys can see, this trade literally within, is this the same day? No, within the next day, it's like a 20 RR trade right there. But realistically, you could have targeted 5 RR, and that would have been a 152-point move during New York as well. So that was a very good trade. This was a very good example of a rejection block. So I'm going to show 2 more examples. So right here, we tag into this 15-minute order block. And more specifically, if you guys saw the consequent encroachment video, you guys see how this all it all lines up together perfectly. Everything that I went over, it's all going to be used all together. So there's nothing that you're not going to be using. But if you guys saw the consequent encroachment video, so literally the 50% of PD array, we perfectly tag into that. And we formed this very long wick. So this was a 40-point wick. So this is already pretty ideal. We want to kind of get an entry off of here. So you could have entered off of this wick right here, literally the very next one. But you could have also entered off of this one right here. So I probably would have looked for an entry here rather than here. But let's just mark out that wick. Let's mark out the quadrants. And as you can see, we perfectly tag into that 25%. So you could have had your short right here. Let's mark that out. Again, stop right at the wick high. So that would have been 28 points. It's a 28-point stop. So that's already really good. And then target wherever you want. So these lows would have been a great target if you're trading the 5-minute. And as you can see, literally 1, 2, 3, 5 candles from the entry. So that would have literally been like under 25 minutes. You would have hit a 10 RR trade on the dot. And as you can see, we just kept going. So you could have really just sniped this entire move down. There's some people who genuinely just trade like that. They just trade rejection blocks. And they don't even set their take profit. They just set a stop loss right here. And then they keep moving down their stop loss as the trade continues. So somebody probably cashed out this entire move. Maybe like around here. Which would have offered like, how much RR? Like almost 30 RR if you cash out here. Like 25, 30 RR. So this just goes to show how powerful rejection blocks can be. But of course they need some context. Because like prior to this, like you would have probably had to have a bearish bias. And then also keep in mind the trade would have been pretty scary to hold with it just being such a tight like stop loss. So it could be very easy in like literally a little move to just stop you out. But if you do it properly, you look for proper key levels, proper draws on liquidity, have a good bias, and just overall understanding of what the higher time frame is doing, and then take an entry off a lower time frame rejection block, it's literally perfect. And this is actually going to be a concept that is taught later on, but I'm going to include it in this video just to kind of give like a little bit of background knowledge. So 10 a.m. is the start of a new 4-hour candle. This is our 10 a.m. open, and this is called the 10 a.m. key open. And this is one of literally the most powerful concepts. When it happens, it always works really well. It doesn't happen all the time, but today was a great example of it happening. So for this to work, this type of rejection block, we don't necessarily need something tapped into. We don't need a PD array tapped into or a low swept. It can honestly form off of a news candle. So like today we had news or some type of manipulation. So those are the two things that you got to look out for when this happens. So some type of manipulation or some type of news happening, and also a very long wick. So look at 10 a.m. and look at the open. And always just check, okay, did we have some type of manipulation? Did we have some type of key level get tagged into at 10 a.m.? Did we have some liquidity sweep? Or did we have some type of news? So in today's case, we had news. So this is what people like to call the 10 a.m. rejection block strat. And literally off of this, you can literally just trade this. Because the risk to reward it offers is insane. Like, using this concept alone, you can probably get up to like 15 RR a month. And you'll be taking like 3 trades a month, and you can just be profitable off of this strat alone. But again, it requires discretion. So I'm gonna make a video more in depth of it, but I'm gonna go over it just a little bit today because it happened and I don't want to forget about this. So again, 10 a.m. we had some news, so we form a very long wick. This is about a 30-point wick. Yeah, 30-point wick. If no news happened, you want to look for some type of accumulation, manipulation, and 10 a.m. setting the bottom wick of the 4-hour candle. And that is the whole purpose of this concept. Just like how I said rejection blocks, the wicks, the entire concept of it being protected, so we don't expect to trade past below this wick, it is basically the same, except this concept is that we open up a new 4-hour candle. I'm going to go over the 4-hour candles in another video as well. I just remembered I didn't cover that. It's the power of 3, 4-hour power of 3. But don't worry, that's coming soon. So yeah, the entire concept of this is that we set this bottom wick and we don't expect to go past this. We expect this to be our bottom wick for the 4-hour candle. So 10 a.m. we open up here. We form this really big wick. So what can we anticipate? Well, this is our rejection block. So if we mark that out in quadrants, I don't need to. Actually, we perfectly hit the 50%. I was actually looking at this trade, but I was literally recording a video for my trade recap. So I completely, like, I was staring at this just go without me. And I'm like, damn, because look, we just continued way higher. So I completely missed this today, but I was looking out for it. But yeah, if you see right here, long. So we would want to long off of here. Again, you need context for this because this doesn't work every time. I'm going to make a more in-depth video on it. I just really want to cover it today. But as you see, literally perfect entry, minimal drawdown. You could have targeted this high right here. That would have been my final target. And that itself offered 6.5 RR. So that's it for rejection blocks. It is one of the best PD arrays that you can ever use. I think, honestly, other than IFVGs, so inverse fair value gaps, a rejection block is super powerful because, once again, it may be scary. It's pretty scary to enter off of, so you do have to practice it a lot. But I kind of feel like that's a good thing because, you know, in trades where you have a very big stop loss, you're going to want to move it more or close out of a trade earlier. But when a stop loss is this tight, you're going to be less worried about, oh, okay, I'm going to get stopped out. But it's whatever, because literally for this trade, you have a 14-point stop loss, which if we do like 3 contracts, this is literally like a $58 stop loss. And on a 50K eval, who's going to care about a $58 loss? It doesn't matter. And that's the best thing about rejection blocks. You only need them to work maybe like 20% of the time, and you can still be extremely profitable. And it's going to work more than 20% of the time if you really use it right, you know what you're looking for, and you only enter when it's very high probability and you have all that confirmation that lines up. And yeah, that's honestly why they're the best. They may be scary, but they provide such good risk to reward, such good stop loss. And yeah, that's honestly it for this lecture.